I think when we came into the year, David, there was this extraordinarily high expectation and momentum, and everything was sort of pro-growth. And I think with the tariff policy, people were just left a bit confused and uncertain because it felt like such a shift dramatically in policy. And at times, this was compared to other financial stress periods, 2008, 2000, 94, 87. I think this is wholly different. I think there's moments where the market seemed a little bit fragile, but if you look today, the S&P is down a couple of percent. And so I think this is wholly different because this is a policy initiative that we've never seen. I actually thought the Treasury Secretary's articulation of how the administration is looking at this was actually one of the best I've heard, personally, in terms of how they think all this will knit together. But I will say, so at Carlyle, we're about $450 billion plus in assets. We have 23 employees, but we have 700,000 employees in portfolio companies around the world. And what's happened there, and I think that's where we get our best information because we have these proprietary KPIs, is at the ground level, it's very tactical and hyper-strategic right now. So if you're in an industry that was, let's say, highly impacted by tariff, then it doesn't necessarily mean that you stop importing, you shut down, you immediately move to a conservative posture. It really is about what's your relative competitive position. So if you have scale, if you have financial flexibility, you may choose, actually, even though if you're in a tariff-impacted part of the market, you may choose to lean in and be very competitive and buy market share. If you're more financially fragile. So what we're seeing on sort of the portfolio side is definitively a lean towards protecting capital, making sure there's maximum financial flexibility, not because people think we won't get to the other side of this, but it's a question of how long. And so how do you manage inventory? How do you manage your client relationships? But people aren't disrupting client relationships immediately. They want to make sure they protect those. And so I would say it's very much a period of uncertainty and wait and see. The flip side, I would say, I probably talked to more CEOs and more CIOs in the past 2 months, maybe in my entire life. I would say virtually all of them have finished the conversation with, hey, don't forget about us, we're open for business. We're not looking to rush to deploy capital, very similar to what Lee was saying. There's a hesitation. The risk premium is definitely higher, but people want to engage and they want to put capital to work. And at Carlyle, for example, we have over 80 billion of dry powder. So we are actively looking for opportunities, but again, risk premium's higher because uncertainty is higher.